Good morning, everyone. Once again, this is Blackforexgroup coming in with another market analysis video. This morning, we're going to be looking at the British Pound USD. But before we get started to break down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here. You want to find good, credible Forex content that can help improve your ability as a trader and to help put a little bit of extra money in your pocket, especially in these troubling inflationary times. Okay. So with that being said, let's go ahead and see what we can do to break down this currency pair and get that accomplished. Okay. Now, before we get to physically talking about what's happening with the chart, let's talk about the fundamentals happening with the Great British Pound and the USD, respectively. Okay. Now, the Great British Pound did have some initial good news come out at the latter part of last trading week, but we also have a couple things that's also counter against that. First of all, we do have inflation hanging over the British pound, and we're gonna have to see because they raised their interest rate, their country's respective interest rate from 50 to 75. So we're going to have to see how is that going to combat its inflation. Okay. Now, if it's not combating it fast enough, or the increase in the interest rate is not enough to combat the inflation, then we will start to see the British pound acting as a weaker currency. Okay. Now, another thing that's affecting the British pound too is the overall FUD that is happening with the entire European economy related to the Russian-Ukrainian war. There's a lot of fear, uncertainty, and doubt with the entire continent of the European economy. So even though Great Britain is not a part of the EU. It's one of its major trading partners and one of its major business partners. So with that being said, it's going to also have a ramification effect on on Great Britain's economy too. If its major business partners and trading partners are not doing so well, it's not going to be doing so well also. Okay, so we're going to have to see how these things play out to see if this increase in the interest rate is going to be what is going to catalyze the Great British Pound actually getting some strength, but we're going to also have to play out and see how this war in Europe is going to affect the entire European economy overall before we can actually make that decision. Okay. Now, for the USD, we also have a dark cloud of inflation hanging over the American economy as well. But one thing about that is that our Feds did increase the interest rate from 25% to 50%. So we're going to have to see how that is going to actually make the USD perform. Just like I said in previous videos, if the increase in the interest rate does not start to combat the inflation fast enough, or the increase in the interest rate is not enough to combat the inflation, then we will still see USD start to perform as weak as well. Okay. Now, even though we're kind of dealing with two weaker currencies over these latter parts of the trading week, the reason why you see there's a lot more strength towards the USD side as opposed to the Great British Pound side is there's a very simple observational thing. There is a war being fought on the European continent, and there is no war being fought on the North American continent. Okay, so due to this aspect, this is why the USD has been stronger against the British pound over the last several trading weeks. Okay, now we did have some. Now let's get to the chart. So as we said it, we've been dropping down since the start of this whole Russian-Ukraine incident, but now we're going into like our fourth or fifth week of this incident. So now it's almost like this is almost like a new trading norm. Us being between a stable market and a non-panic market where any news event could push it or sway it one way or the other. Okay. And with that being said, let's look at the chart. Like I said, we've been dropping down. Okay. And we did have some retracement come back up. Then we would try to go back down. So basically, we're kind of ranging between these two areas here. There's a good possibility that we may continue to have an initial push up before we start to go back down again. Because, like I said, with the major three European currencies, which is the Great British Pound, the Euro, and the Swiss franc, we're going to have this inherited weakness with this just due to the overall European conflict. And until that conflict is resolved, we're going to still be seeing weakness with the British pound and the CHF and the euro until the conflict is resolved. So, what we're going to be seeing how that reflects on the charts is we may have initial push ups, which is just retracement, and then we'll start to go back down. Okay. So as we see out here, we came up some, came down very aggressively, came back up some. So now we're in a situation where we're here. So we could go back as far as here or this area here before we continue to start going back down. Or there's a good possibility we can go back down from this point here, okay? So we may go back down from this point here. We may go as high as this area here before we start to go back down. Or we may go as high as this area here before it starts to come back down, okay? If it continues to go up, I don't want you guys to get tricked into believing this is price turnover. Now we're going for an uptrend. Okay. Only thing that can support that is if the fundamentals change up. Okay. So the increase in the British pound interest rate starts to combat its inflation. Russia and Ukraine come to some agreement with peace talks. Okay. And then on top of that, worldwide inflation starts to go down. All right. Now, are these things possible or in the works to happen? Yes, but these are not going to be policies and events that's going to happen overnight. It's going to take some time. And until that actually starts to happen, we're just going to still see a lot of inherited weakness with the Great British Pound. Because, like I said, we're not in a situation here where we're dealing with which currency, with the British Pound and USD is stronger than the other. We're looking at which one is more weaker than the other. And currently, right now, the British pound is much weaker than the USD just because there's a war being fought in Europe and not one being fought in North America. So we may have, this can go two ways about it. We may have a breakup in price here. We may retrace some more before we start going down, or is it good, just as good as a chance that we may actually start going down from this point here. More likely so that we may start going down from this point here because it does look like the USD is going to be performing so much strong throughout the beginning part of this trading week due to the increase of our interest rate, due to the increase of the the Fed's increase in the America's interest rate. Okay, so I hope that information was helpful for you guys. Happy trading.